FM. It's the Culture Club there. Cultured as ever, don't you understand? So, 19 before 9. It's so nice to have him back. We're talking about finances here, and we're talking about Phillip Statler from Statler Financial Services, who is back in the saddle this morning. Phillip, it's so good to hear your voice this morning. I really hate it when I'm talking about 500-point swings in the Dow, and I'm doing it all by myself. I need somebody to help me explain this mess sometimes. How are you?
Hey, I'm doing well. I had a good 3 days of meetings and educational stuff, and just working on becoming better business people. And so it was really a good couple days there at our mastermind there. And but I got to say, you did a good job yesterday talking things back up before I got back here.
No, we sure did our best to set the table. The Dow was up 596 points yesterday. Standard & Poor's was up by 80, and the NASDAQ was up by 220 points. Not a bad day until you consider the fact that the Dow was at 33.9, and it took a number like 596 points up to get it out of the correction level, because we're about 9% off the peak. So, yeah, the minds are on Ukraine, and that's probably where they ought to be right now. Wouldn't you agree?
I think so. I mean, and definitely that's that's the thing that's causing a lot of the ups and downs, because there's just so much uncertainty over there. But I will say this, that looking at my year numbers, that did put the NASDAQ, the last 2 days, put the NASDAQ back into positive territory for the last 12 months.
Well, thank heavens for small favors, huh?
Barely, but it's there.
Year to date is still El Stinko, bringing us up through yesterday. The news item of the day that really caught my eye yesterday was Jay Paulson, the chairman of the Federal Reserve, his usual every couple of month appearance before Congress, and he did something I have never heard a Fed chairman do. He actually told Congress yesterday that he was going to push the Open Market Committee on their meeting this month to increase interest rates by just 0.25%. Now, you and I were saying that, we could go a half, and some of the guys were more hawkish enough to be talking about 0.75% interest rate increase on the March meeting. Paulson said only a quarter, and while you and I would agree that's kicking the can down the road at inflation a little bit, it's definitely a market calmer while everybody's worried about the Ukrainian situation.
Oh, yeah, definitely. That I think that probably helped the markets yesterday significantly, because it gave some certainty to the interest rate increase. And so, anytime that you can bring some certainty or take some uncertainty out of the market and the economy, that's going to help the markets. And I think that's probably what we saw yesterday, is that was a big help.
Oh, yeah, the fear and greed index that I follow on one of my tip sheets went from extreme fear to modest fear. I mean, it was like a 20-point uptick on our fear and greed index just after the Paulson remarks. I mean, everybody knows I've been describing these interest rate increases as castor oil. It's good for you, but it tastes terrible when you do it. Kicking the can down the road a little bit while we've got other things to worry about and other fish to fry. I mean, economically, it's a bad idea, but politically, it's the right idea for the markets.
No, definitely. And we're seeing more political decisions than economic decisions coming out of everywhere lately.
Yeah, like how about how dangerous COVID is, right?
Yeah, exactly. Yeah.
If anybody didn't notice, this has nothing to do with financing, but the official CDC map all of a sudden went from 80% of the country in red, high danger, down to 80% of the country down in orange, meaning be careful, all in 24 hours. Gosh, couldn't have had anything to do with the State of the Union speech, could it?
Politics.
Yeah, government data dump this morning. We got the usual Thursday reports out, and they're all relatively good, too, everything being considered. Initial jobless claims, we were expecting 225,000 new jobless claims last week, only got 215,000. The continuing claims upticked by a little bit, but you got to keep in mind, when you're down in the 1.4 million range, we're pretty much at full employment as far as continuing claims are concerned, so I don't think a slight uptick there is really going to upset anybody either.
No, it's not. You're right. We are by definition in full employment, and which is somewhat concerning, right? Because there's so many job openings that are not full, but yet we've got pretty much everybody that wants a job has a job, except for this about 1.5 million people.
Yeah, and they have a portion of those evidently don't want a job, or in some cases they're just overqualified for the jobs that are available. And if you feel like being uncharitable, they're too darn picky at this point.
Well, yeah, it could be that. The other thing I ran into is they could have, records that don't allow them to work in certain industries. So that can be an issue too.
That as well. The other economic report that came out this morning was worker productivity. They expected a 6.6% increase in non-farm productivity last quarter. That's exactly what we've got. So I got nothing exciting as far as government data dump information. It all basically reinforces the same thing we've been saying all along. Economy's perking along all right. We're looking at a bad inflation number, and the problem is because we got an international crisis, we probably can't and maybe shouldn't do anything about it for a month or so.
Yeah, that seems to be the case, which will make it even more interesting the next meeting to see what they do in terms of interest rates.
Yeah, because in the negotiations, this particular minutes from the Federal Open Market Committee could be really interesting because, like you said before we got on the phone, Paulson said he was going to propose and felt that he could get 0.25% increase from the Fed meeting this month. Now, we've had Fed governors that have been on the rubber chicken circuit talking about how they think we ought to go up to 0.75 point all at once, and 0.5% was pretty much what they were expecting. Now, the minutes are going to be real interesting to see just what kind of a rebellion Paulson has on his hands next week.
It will be to see what the sentiment is going forward. If he gets the 0.25 point, what's he going to have to promise maybe for the next meeting or two in terms of interest rate hikes?
Yeah, if the St. Louis Fed starts a food fight, we'll know we got a problem. We do have earnings season going on, and you got some money on your mind with a few companies out there. What do we want to start with this morning?
Well, let's start with Best Buy. Best Buy came out. They did fall a little short of expectations. Their earnings came in as expected at $2.73. They missed a little bit on revenue. But I got to tell you, they're bouncing back really nice right now. They're up a little over 5%, mostly because that the fourth quarter was supply chain issues. That was a problem. Still got supply chain issues, low inventory. But they feel like now that things are coming back online, and they think that this year will still end up being a very good year for them. And so that's giving some positive news to Best Buy and moving their stock up higher.
Cautionary tale to be had there that you could even have a slight miss, and if your guidance is good, the market likes you this time around.
That's right. If you can make a case that, hey, look, this is, we lost it because of nothing that we could have done any better. We just couldn't get the product to sell. Well, then that's going to help them down the road, especially with guidance.
Mm-hmm. Elsewhere.
So I want to talk to this one, and I never really understood this company, but they're a software cloud computing company called Snowflake. I just don't like the name, but it makes me think of other things, right? Yeah. So, but they lost 43 cents a share. Revenue was better than expected, so I'm not sure what the deal is, but they are getting beat up. I think they gave a lot weaker than expected guidance for this current quarter, and so they're down almost 19% right now.
Snowflake is melting.
There you go. I knew you'd find something to spin off of that.
Yeah, I've never heard of it either, but it does sound like an activist company at one point or another, doesn't it?
It does. Just the name of it just doesn't quite float. Then we had Victoria's Secret. They spun off their own company now, not tied in with Bath and Body, and so they did better than expected on earnings by about 7 cents a share. Revenue was a little bit above expectations as well. So things were looking good for them. They're basically in line. I mean, they're down less than 0.2% right now. It could be some profit taking. It could be just some other. They're saying inflation is an issue for them. So that could be causing just a little bit of a tinge of issue with them. The last one I have for you is Box.Inc. Box.com storage company, another internet storage platform, but a little bit different than some of the other ones. But they beat on top and bottom line, and they're doing well this morning. They're up almost 6% before we get started.
Cloud storage is definitely something to get into these days. There's a lot of them out there,
especially if you're good at it.
Yeah, just don't name your company Snowflake.
Yeah, I just don't quite get that one.
I don't get that. Setting the table again, big up day on all three of the major indexes yesterday. The Dow was up by over 1.75% in one day. That's a barn burner. Even better than that in the S&P. They were up 1.86%, and Nasdaq was the slacker in the bunch. They were only up about 1 2/3%. In other words, a great day yesterday. 45 minutes before we open, how are we looking this morning, Phillip?
So I still have green ink. Well, you know what? My quotes are behind. I'm not sure what's wrong with my ticker right here. So let me see if I can find my delayed quotes real quick, because this is not helpful. So it looks like delayed quotes. Oh, we're still in the red. I mean, in the green. So that's good. My numbers were still from 815. That was not helpful.
I've got 840, and that's about as close as I can get.
Yeah. So we've got the Dow is up a little over 1/3%. We got the S&P 500 up 1/3%. Nasdaq's up 0.2. I got to tell you, well, interest rate 10 years back up to 1.87 right now. So it's moving up a little bit as well, which is kind of good. We then have oil is up almost 1%, up to 111.69. Not a really good move there. We've got gold up 0.4, and we've got silver up 1.1. So everything is green across the board, whether we like it or not, Dave.
Yep. Wheat and corn are being watched as well, because that's kind of one of the pawns in the Russian thing. Wheat is at a 14-year high right now, to give you an idea. It ain't just the hard commodities that are going crazy.
You said wheat, not weed, right?
Well, that too, probably, but you buy it for a completely different reason. Once again, we're looking at a relatively little bit of green anyway. We don't like the oil, but everything else is fine. Phillip, if somebody needs to be able to take the volatility out of their retirement funds, and heaven knows we got a lot of it, how do I find you today?
You know, Dave, they can give us a call at 863-382-0037. That's exactly why we developed our core retirement design, to help folks design the retirement they always dreamed of. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and on 95.3 FM.
And back here again tomorrow morning on Light FM, together again for twice this week. When do you think they're going to start quoting weed futures? Anyway, I think that's an interesting idea. Have a good day, Phillip. We'll see you tomorrow.
Right, talk to you later.
You. Yeah, it's 105.7 Light FM and Statler Financial Services, Phillip Statler. Are you near retirement?
Hey, folks, again, I want to thank you for joining us today. I hope your week has gone well, and we'll be back here again tomorrow, same time, same place. I hope you'll join us then. Until then, have a great day.